All right, Ninja, I wanted to do this video real quick for you regarding the dollar, gold, and silver real quick. And right now, as you can see, we're looking at the daily chart of the DXY, the US dollar currency index. And kind of the back of the story here a little bit, the dollar was put in a high, lower high, lower high, lower high. And most times, let me get this out here for you, after you break the low pivot of that second, lower high, like we did here, came up, couldn't make a new high, and then broke it again. As you can see, we came on down, but most times it takes an asset a lot longer to rebuild itself, to find, the buyers to support in order to move back up. And even so, we made yet another lower high, entered around this 20 day simple moving average. Then we have this downtrend line, as you can see here. 2 days, it wicked up, but was, sold off. And then boom, over the last couple of days, I mean, it's like, it's on. And I'm thinking what some of it might be, quite frankly, besides support from the Fed, obviously, is that people are looking at the dollar, believe it or not, as a risk-off investment, almost like a stable coin in crypto. And then something else a little interesting on the weekly chart. Each candle is 1 week of price action. I know there's a lot going on here, so we'll try to smooth it out here. And the reason why I had the 100 on here, we came down, hit it, and this little high pivot, previous resistance, now support, obviously, and that's what also helped the rebound there. But back to the weekly, some people might call this a cup and handle. I just call it a old school fry pan bottom. Here's the top of the pan up here, and instead of going all the way down like a lot of guys do and to the bottom of the pan, so to speak, I picked, the lowest low pivot here, which was here, and then we made a little bit higher low there, and the run from here up, the measured move, is about 5%. So if you put it here at 5% here on this breakout candle for the whole week, and then this is the next week, that takes you up here to about $99. So if it gets over, I don't know, 98, $99, better believe they'll run it up to that whole round even number of 100. Okay, so but the first resistance is going to be this little high pivot here, and then we'll see if it can fight through this consolidation zone. A lot of times it's hard to get through. It's a lot easier to go up and through kind of these toothpicks here holding up a building than it is kind of a foundation area. So time will tell. Now we're going to go ahead and go to gold, and I like looking at it on the weekly chart because it just smooths everything out. You can see everything, the lows, the highs, potential breakouts, that sort of thing. And as you can see, yeah, still making lower highs here. But if we do have a measured move of this pole of the flag here, that's how you do it. 36% move to the upside. If I can get this to work. And that puts about 2,500. Okay, not if, but when this thing is finally let loose. That's the first target. Okay, on the monthly, I think it's around 3,000, but that's another story. But doing pretty well here. We really need to jump up and take out this last lower high here and actually break out of this down trend line to get the party started. But not doing bad considering how everything is traded in the world these days regarding gold and on the COMEX, etc. And this is silver. I'm gonna take that off. It's kind of our little deal. But anyways, you can see on silver, this is the weekly again. Making lower highs here and got the big slam down. I think it's more intentional than anything else, but at the same time, as we saw in the dollar, looks like institutions, individuals are, going to that, believe it or not, that risk-off dollar. And as our markets were, started being a little bit weaker over the last few weeks, But on a side note regarding silver, I was listening to an interview, Andy, with Miles Franklin. Now, I could sit back and watch that guy all day long, just highly intelligent, just sitting there, my jaw agape, catching flies, listening to him. But if the notes are correct here, there's about 2 billion ounces above ground right now, and about a billion of those ounces are held very tightly. They're in vaults, big silver bars, ETS, pension plans, that sort of thing. So really about a billion, uh, not confirmed, but kind of a rough number of tradable. And as you know, there's even altcoins out there that have more than a billion coins. Okay, not to be silly here, but just to show you how a limited supply, and then all the low hanging fruit, so to speak, regarding silver has pretty much been mined. On top or close to the top of the ground, and we need the new imaging equipment that they have now are helping mining companies go deeper and locate that silver. But another situation. So we have this depleting asset in a way, and to kind of back that up, a number of years ago, a government agency with geologists, I don't know if it was Department of Geology or what, but they did a study, and on the periodic table, they were saying the first element to go away that we would lose off the periodic table because there wouldn't be any was silver. Okay. And I thought that was pretty fascinating. So that tells you right there, it's a very needed commodity for our future, for technology, etc. And to add to that, a lot of people are talking about dollar cost averaging. Now, dollar cost averaging, that was a old Wall Street scam about always getting people every paycheck to come in and put that paycheck or a piece of it into the casino we call the U.S. stock market, and whether the stocks were up or down. Now, though, my belief in that is that I will only dollar cost average, and I call it scaling in, as an asset is rising, whether that's crypto, a stock or what have you. And once that top has gotten in, and it looks like the asset is getting weaker and weaker, I'm not dollar cost averaging in on the way down because we don't know if it's going to zero or below zero. Okay, if you're going short on something, and so we can kind of judge by the breakdown in structure where the top is, and sometimes you can catch the bottom as well, but it's a lot more dangerous. So I don't believe in dollar cost averaging as an asset is going down. I say all that to say this: the only thing I would co-sign on, my own, kids or grandkids to dollar cost average on if it were going down would be gold and silver, and primarily silver. So that's kind of I don't know, my philosophy anyway, and how much belief I have in the future of the silver market. But just wanted to do this right quick for you, and as always, we will see you on the charts.